Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Hey, welcome to Modern Investing Techniques, episode 76. It's June 14th, 2026, and I'm Patrick in Vancouver. Here's your daily market intelligence and today's practice trade. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. The week's biggest developments pulled together, what actually moved, why it matters, and what to watch next. This week, the Nasdaq Composite closed at 25,889 after swinging through a 2% drop midweek and a 2.5% rebound on the Iran deal news. The S&P 500 ended at 7,431, while the TSX Composite reached 34,938. Portfolio cumulative return, year-to-date return, and alpha versus the Nasdaq are not available in today's data, so I will not report them. The dominant thread was geopolitical relief from reported progress on an Iran deal that cut oil prices more than 4% and lifted financials on expected trading revenue. Sticky inflation readings at 4.2% CPI and 6.5% PPI kept both the Bank of Canada and the Fed on hold, with limited easing priced in. Index inclusion effects, long-cycle infrastructure spending, and first-mover moats in healthcare also shaped positioning across the 5 trading sessions. Index inclusion creates a mechanical buying wave that can produce outsized short-term moves even when fundamentals have not changed. Marvell Technologies' addition to the S&P 500 at the end of June triggered a 7% plus pre-market jump, illustrating how passive funds must rebalance regardless of valuation. The strategy works best when the added stock already has sector momentum and above-average trading volume. It carries the risk that the move reverses once the rebalancing is complete. To implement, screen for stocks with upcoming index announcements using your broker's news feed or ETF holdings reports. Then size the position smaller than a pure fundamental trade because the catalyst has a known expiration. Historical data shows these inclusion pops have delivered the strongest alpha in the first 3 trading sessions after announcement. Risk management requires a tight stop just below the pre-announcement close once the initial surge fades. Air Canada and the International Association of Machinists and Aerospace Workers reached a tentative agreement on a new contract this week, according to BNN Bloomberg. The deal covers approximately 9,000 workers across the carrier's operations and addresses wages, scheduling, and pension contributions that had been in dispute since the prior round of bargaining. Both sides confirmed the agreement ends the immediate threat of job action that had been scheduled for later this month. Union leadership stated the package includes improvements to job security language and training provisions that were not in the previous contract. Air Canada indicated the tentative terms will now move to a ratification vote expected within the next several weeks. The resolution removes one near-term labor overhang that had weighed on the stock during the first half of June. Retailers, including IKEA, are accelerating expansion of small format stores as a response to shifting consumer patterns and rising real estate expenses. The Swedish furniture giant opened or announced more than 40 compact urban locations in the past 18 months across North America and Europe, each averaging roughly 1/3 the size of a traditional big box outlet. Company executives cited faster inventory turns and lower operating costs per square foot as the primary drivers behind the shift. BNN Bloomberg reported that similar moves are underway at other chains seeking to maintain physical presence in high-density neighborhoods without the capital outlay of full-size stores. Early results show these locations achieve higher sales per square foot while requiring fewer staff hours to operate. The trend coincides with post-pandemic changes in shopping behavior that favor quick in-and-out visits over large-format browsing. Earnings reports scheduled for the coming week include Canopy Growth and Kroger, both of which will provide fresh data on consumer staples margins under the latest producer price pressures. Canopy Growth is expected to release quarterly results that will show whether recent cost-cutting measures have offset continued softness in recreational cannabis demand. Kroger will report on grocery pricing power and same-store sales trends after the 6.5% PPI print highlighted elevated input costs across the sector. Analysts will watch both companies for any commentary on how higher energy and packaging expenses are being passed through to customers without triggering volume declines. The releases arrive ahead of the Bank of Canada's July 15th decision and could influence sentiment toward defensive equity sleeves. Investors using TFSA accounts can monitor these names for potential margin expansion signals that align with the inflation-protected strategy discussed earlier. Another city has deployed additional transit police to address safety concerns and fare evasion, according to BNN Bloomberg reporting. The initiative follows similar programs in other major North American municipalities that have reported measurable reductions in incidents after increasing officer presence on platforms and trains. City officials cited a 23% rise in fare evasion complaints over the past year as the immediate trigger for the expanded deployment. The program includes both uniformed patrols and plainclothes enforcement teams focused on high-traffic corridors. Local transit authorities indicated the added staffing is funded through a combination of municipal budget reallocations and provincial grants. The move reflects broader municipal efforts to restore rider confidence after pandemic-era ridership declines. Meta continues internal efforts to commercialize the new AI model developed after hiring Alexander Wang a year ago, according to CNBC. Wang, previously founder of Scale AI, was brought in to accelerate Meta's large language model capabilities, yet the company has struggled to integrate the resulting technology into its core advertising and consumer products. Mark Zuckerberg has taken direct responsibility for driving adoption across business units, a shift that underscores the gap between model development and monetization. Internal documents obtained by CNBC show that early versions of the model achieved competitive benchmark scores but lacked clear use cases that justified additional infrastructure spend. The episode illustrates the execution risk that remains even after high-profile talent acquisitions in the AI space. Canadian investors tracking global tech exposure may note the story as a reminder that hiring announcements alone do not guarantee near-term revenue contribution. President Trump is traveling to the G7 summit in France with the Iran deal and Ukraine on the formal agenda, CNBC reported. The meetings occur against the backdrop of reported progress toward ending the Iran conflict that already produced a 4% drop in oil prices this week. European leaders are expected to press for coordinated energy security measures should the deal hold, while the Ukraine file remains a separate track with limited linkage to the current ceasefire talks. White House officials indicated the summit will also address tariff and trade issues that have resurfaced after the recent inflation prints. Markets will watch for any language that signals follow-through commitments versus rhetorical progress. The outcome could influence whether the current oil price relief proves durable into July. On Sunday, with markets closed, we use this time to reflect on how the week's themes connect rather than update any single simulated position. The Iran deal breakthrough and the inflation prints together show why energy exposure and pricing power screens deserve ongoing attention heading into next week. This is a simulated trade for learning purposes, and we will watch for follow-through volume in index-added names and infrastructure suppliers on Monday. Last week's completed holds showed mixed results, with geopolitical headlines overriding some sector momentum. One simulated position entered on Monday open and exited Friday close captured a portion of the rebound in financial names tied to IPO expectations. The thesis around elevated trading revenue held, but the magnitude depended on how quickly oil relief translated into broader risk appetite. What this teaches us is the value of confirming volume above the 20-day average before scaling any position that began as a catalyst trade. When the first tranche shows a 5% gain and volume exceeds a 20-day average, that is the precise moment to consider adding rather than letting emotion drive size. The XLF sector ETF on pullbacks to the 50-day moving average remains the cleanest way for Canadian investors to access bank trading revenue inside TFSA limits. Global infrastructure ETFs offer TFSA-eligible exposure to the $295 billion China data center buildout, focused on power, cooling, and networking suppliers. Brokerage screeners that filter for expanding gross margins across the last 8 quarters help identify inflation-protected equity sleeves when PPI prints above 5%. These tools connect directly to the week's momentum and pricing power themes by letting you set alerts for index announcements and margin expansion without daily monitoring. The single most consequential development heading into next week remains whether the reported Iran breakthrough produces sustained oil relief or merely a short-term reprieve. Watch for follow-through volume in financials and infrastructure names, plus any shift in Bank of Canada language at the July 15th decision. The practical takeaway is to keep position sizes modest on catalyst-driven trades and to use volume confirmation before adding to any winner. That wraps up today's modern investing techniques. Remember, every trade is a learning opportunity, win or lose. Subscribe, share with a friend who wants to invest smarter, and we'll see you tomorrow. And if you'd rather watch than listen, find us on YouTube at Nara Network. Links in the show notes. And before you go, this show is part of the Nara Network, a family of daily podcasts covering tech, science, markets, and more. If you enjoyed today's episode, give Models and Agents for Beginners a listen. Artificial intelligence explained simply for beginners and curious teens. You can explore the whole lineup at neuranetwork.com. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking